Welcome to the Business Finance Bulletin, episode 278. Welcome again to the latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services, the commercial finance experts. In this bulletin, SME investment appetite is declining, EPC ratings and commercial investment property purchases, and the increasing cost of late payment burden. Let's open this bulletin by taking a look at investment appetite amongst small business owners. What are business owners thinking of investing in their businesses for the future? Well, that's a question posed by Bibby Financial Services in their latest SME Confidence Tracker survey. The latest survey found that 69% of business owners said they are planning to make an investment in their business. However, that compares to a figure of 80% in the same period 2018. So you can see there's been a definite fallback in investment appetite amongst small businesses. So what are the barriers? What's holding business owners back? Well, first of all, 55% of them say they have concerns about the UK economy. 54% have concerns about exiting the EU. 35% of them have concerns about the EU economy as a whole. And 35% say they are suffering from poor cash flow. So other business owners that are looking to invest, how much are they looking to invest and where are they going to invest it? Well, it seems that the average investment pot is £69,000. Now you may think that sounds a decent sum. However, compare that to quarter 2 2016, i.e. just before the Brexit vote, well, that investment pot was £100,000. So again, a very big drop. So where are business owners be going to invest if they have got the appetite to invest in their businesses? Well, 24% said they're going to invest to keep ahead of the competition. 22% is about general business expansion, and 20% of them are going to upgrade their technology. So there are plenty of good reasons why businesses should be investing, but clearly there's still a lot of reticence about getting the checkbook out and investing for the future. Let's move on now to a topic I've never covered before, and that's energy performance certificates, or EPCs. Now, it's important you know about EPCs if you are a commercial property investor. In other words, you're looking to purchase a commercial building with a view to letting it out to a third party. You have a landlord-tenant relationship. Now, with effect from the 1st of April 2018, all domestic and non-domestic premises where they're rented out need to have an EPC rating of a minimum of E. Now, the EPC rating goes from an A, where the property is most energy efficient, right down to a G. So it's important that the assessor gives it a minimum of an E rating. Why is this important? Well, lenders in particular will not lend to you on that commercial investment property if that minimum rating of an E has not been achieved. The property essentially becomes unmortgageable. Now, this came to our attention this week when we were helping a business owner do such a transaction of buying a commercial premises. We asked for the EPC report, knowing that the lender will be asking, and lo and behold, the property was rated as a G. So we've gone back to the seller, we've asked them now to do some remedial work with the building reassessed, and hopefully it will be back at that minimum rating of an E. So if you are thinking of investing in commercial premises, don't forget to ask for an EPC certificate. It's the law to get that minimum rating of an E, and it's something that you need in order to get a lender on board. Let's close this bulletin by taking a look at the increasing problem of late payment. A new survey carried out by Pay UK, which is the body that oversees the BACS and direct debit system, estimated that the volume of late payment amounts now stands at £23.4 billion. Now compare that to where it was a year ago in 2018, when the figure was £10 billion. Yes, over 12 months there's been a £10.4 billion increase in the amount of money that small business owners have out there in overdue bills. Now the cost is significant. The survey estimates that small businesses are spending £4.4 billion a year on managing late payment, and 22% of those businesses surveyed said that it costs them approximately £500 a month to manage late payments. Now 63% of them say that the late payment impact does have a negative impact on their business. And it seems that the average amount owed by businesses at any one time is approximately £25,000. It's a big sum of money to have tied up. So what can you do? Well, obviously make your terms and conditions very clear. Make sure that your customers know what your terms are, 30, 60, 90 days. Stressing to them how important prompt payment is. Have a clear system in place so you can chase payments when they become due. Make sure that the money sits in your bank account, not your customer's bank account. Well, that's it for another bulletin. As ever, I hope you enjoyed watching, and if you did, please don't forget to give it a like and a share. So that's it. In the meantime, have a great, successful and profitable week.